Good evening. Ira Epstein with your SPDR-ETF stock market wrap-up, and this wrap-up is for Wednesday, the 1st of May, 2024. And what a day it was. You know, today was the FOMC decision and then the press conference. And basically, the Fed is holding tight. They spoke in detail about inflation stickier, longer, that possibly this shelter idea takes longer to work through the economy as leases renew and other rent factors take place in that part of the market. They talk about the fact that the restrictive policy they believe is working. It takes time. The labor market has been strong, but they are seeing certain factors that show that it is starting to weaken. They would get concerned about labor, and this was interesting, if it jumped over 0.2%. But from what point? From the most recent higher, that's just hanging right where it's at. So, probably anything near 4.2 would get the Fed probably saying that, they've got to do something about that. So it's interesting where it all comes in. It was not as hawkish as it could have been. And as for the Dubs, no, I still say you get, if you're lucky, one cut this year. Now, I don't know when that'll be, but that would be lucky. Again, the Fed chair talked about the fact that the first 3 months of the year or higher inflation. Some people pick that up in conversations afterwards. Ira, you're right. They need 3 in a row of something or to do it. That's not what he exactly said. He just said 3. I believe you need to get 3 moves where you see that inflation is falling and labor is weakened. Do they have to be exactly in a row? No, but you have to give the Fed the belief that they are coming down and down nicely. Now, we get a report Friday on the U.S. jobs. We'll see what that does. You're going to get Challenger Gray in the morning, too. In fact, let's take a look at that for just a minute. You get Challenger Gray coming out at 6:30 tomorrow. Jobless claims are going to come out at 7:30. They're expected another 212 number. How often do we keep getting that number? U.S. March trade balance data will come out at 7:30. First quarter preliminary. This is an important one. Non-farm productivity data comes out. Factory gate orders for March will be released at 9. Energy analysts will look for the EIA report. That will be another good one. And then we had earnings in red. These were all down just minutes ago. And the ones in the blue here are all to the upside at this point in time. So interesting that eBay did come down, and I'm not surprised at that. As you know, we were talking about that, and you got close enough to the upper Bollinger Band when we looked at it to see what it was doing. Now, let's go and take a look at these chart action if we could. But before we do that, let's just see where we're at. Tesla down another $3, but NVIDIA all over the board finishing $33 lower. In Amazon, up $4, good earnings report, but well off the highs that it made in the pre-market yesterday and late in the day when we opened today, when the market opened near those pre-market highs, the aftermarket highs, I should say. That's what we did. You can see TLT finished the day with a bit of a gain. The stock market was wild. Now, coming in, and I had written my research people, and I mentioned this yesterday, I believe in some of my videos as well, there was a huge bets being played in options, some of the biggest that we've seen recently, that we would get a 1% move in the S&P up or down today. You're not going to believe it. It cleared that, and then it completely gave everything up and fell apart. But you did get to the 508.18. I'm sitting there going, I can't believe it. These guys got it just right. So if they made their bet, did they make any money? Because you got to pay the premium to get there, all right? So if it doesn't extend, what do you do at that point? Depends, I guess, how you're betting, what you're doing, but you got to adjust that pretty fast. Microsoft put out another $5. Meta did gain nicely, $9 today. Bank of America, or Boeing rather, up $3 at this point. And I'm interested in Boeing down here. It seems to be carving out something of an area where it's finding a floor for its recent deceleration. Is that the right word we can use? MasterCard has literally fallen out of bed. Nothing nothing good for the company going, missing on all kinds of counts here, and you could see how it's falling apart. It looked terrible. It's continuing terrible. I doubt that it's going to get through all this, but it's got a ways it can go. I know people look at me when I say, can it get to 400? And I'm going, yeah. It can get all the way back into these numbers if it wants to keep falling apart. You literally have to get back over the high right that I'm pointing at in order to say, we got something different. And that number's in the 468 level, so I'd be paying attention to that. But this is an extended break. You have a gap in the chart. So the question now is on that gap, if you close lower, if you had another gap, you could really have something that gives you an action, a breakaway gap that could cause there. When we see where the market went to, it stopped yesterday, and we talked about this, and I'll come back to that if I could with you. Let's just see. Well, let me come back. Yeah. The first support I was looking for was the 100-day. Now, there's a Bollinger Band right by it. Let's go to it. Ready? Right here. So this is the first move under that number. Now, if you extend the 426 level, that could be the next number. Getting to 400 will be hard because generally a 200-day average does it. But you can see that there could be more downside should you get another gap and you go and you catch the traders panicking in this particular vehicle. If the market trades normal, it's just a matter of days before it tries to get back up into the Bollinger Band. You're oversold, so I don't think you're going to attract new selling other than people that are super nervous because they're just not hitting their numbers in any way. In eBay, you're back right down to the support level. Now, momentum's still pointing down, but unless you get back over here and you start taking out this low, we'll come to it right now. Here we go. So unless you get back under 50.56, the market's likely to look to find a trading support level right here at 51.23. I'm going to be studying that tomorrow to see how this market acts because then it could come back up for these numbers. But again, what's making these companies miss? It's not that a lot of them didn't hit their numbers. It's their forward guidance, which is really not looking good on those companies that I showed you that were in the red. In Tesla, the market got up, as you know, off the news on China, and it's working with everybody. Well, it's given back now, today you were down 1.8%, and yesterday you were down 5.5%, so that's about 7%, and you gained the day before 15. So you're approaching a halfway point here. Support's waiting for the market at 165. I think it's too overbought to consider the chart right here. In FCX, Freeport, Battleground, now you can see all this sideways action in time, I think will resolve itself. And I am very friendly this company. I'm very friendly all the material companies. And the reason is that I believe that the moves starting in June, the United States Federal Reserve. Well, banks are looking to go at least one time to cut interest rates. Maybe then they pass another month after the next meeting, whatever. Then they come back to the market and test the waters again. That's to spur on their economies. To spur on economies, it takes a little bit of time, but eventually they're going to use these in their industrial production. In the gasoline, in the crude, are you watching how much it fell out of bed today? $3 a barrel. And that's just pulling everything with it at this point in time. So no, we're not getting that rally that we were so scared of or hoping for, depends on your point of view, for the spring, summer gasoline driving just yet. This certainly took out the diehards that were holding in there. I can tell you, I haven't told traders to go back into these markets in a while, and that chart action just isn't pretty. Now, in the financial markets, I think if you take out 40.36, what happens is you're going to get aggressive selling in this market. Stops probably over today's high, and traders might look to get the market back down to the 39.40, 39.80 level. You've got the bias down, the trend down. Now, the trigger could be that. Got to have some tight stops on it in case the market wants to whip you, but if not, market looks lower to me there. In XLI, that's what I think the pros are going to look like. All you did is rally back on this rally, and so many of these markets did this, where they got the swing line turning up, but the bias down. The markets rallied into the 18-day average of closes and sort of stalled out there. XHB, no different, as you can see. XLE, no different when it happened, and now you're making the new lows, and that's why the XLE shouldn't be bought. Even on the weekly chart, I showed out traders because over the weekend I liked XLE, and when it finally was approaching the number, you lost on the weekly chart as well, the bullish embedded reading, and I said, you can't buy on that basis. In the gold market, a bit of a bounce, but not yet bullish on the daily chart at all. You have higher high, lower low, but I do think the market is screaming at you that it's going to have a hard time getting through 211.86, that it wants to hold that zone. So let's see if that turns out to be right. Silver's fallen back to the same number. If it embeds, which today's the first day of doing it, but if it did it, then I'd be opening my eyes up to getting down here. Again, I think this was disappointment in the market. You've seen a lot of long liquidation. And the same in the copper that ran up, and it's now pulling back for the customers right through here. Void of a trend. Now you have a lower low, higher high that all began here when you peaked out and had this break. So the market has to reconstruct itself, and that's what I think's going on. Look for a lot of battle, I think, at the 18-day average of closes. In TLT, I understand the short covering rally, but there's nothing to get excited about here. The Fed did not say they're going to cut interest rates, so wipe that off the table. If that's what you think you heard today, that's not what you heard. They don't think they have to raise them again, but it is an open part. He did not close that down. Could have said, no, we're not going to raise interest rates again. That is not what was said. So be very careful right here. The market is trying to figure out where is the real peak in yields, and that's what the market is going to search for now. We get a jobs report on Friday. Be cautious going into that report. Remember, a strong report means higher for longer. A weak report, that's one of the nails in the coffin where the Fed's going to keep looking for those to say, that jobs number is weakening. See, the next 2 days, very important in all the jobs data. In UUP and the dollar, I still don't see a reason not to stay in the bull camp. Higher for longer is not weakness for the dollar. And in the euro, I still see the bear side of this market where it can get back down even lower, as they're going to be aggressive, in my opinion, for a June rate cut. It would take an awful lot of data that comes out and has to prove to the members not to make one, not necessarily done, but one install, is what I think you're going to see from them. So you put it together, you come up with your game plans, and away you go. And I want to be with you tomorrow morning, if you join me, when we talk about charts. Now, this is what my average chart in the morning when I put out my morning subscriber looks like. I've got the slow stochastics here. I can turn over here, maybe this will help you more. Then what we have are the Bollinger Bands. If I have window envelopes, I explain how they work. They're right here. The 100-day average, the 200-day average. So you put this together and you start coming up with what we call trade ideas. Now, I'll show you often during Monday through Friday, the daily charts, and then I will bring in the weekly charts to work with it on a regular basis, so you get to see where to go, buy here, sell there. I'm going to cover 40 markets, stocks, spiders, and ETFs, so you get everything mixed in. I'm picking out right now a weekly bonus video that'll start for you next week. It's not just trades, it's education with them, what I'm seeing, why I'm seeing it, where you go with it. So how do you get out all this, plus my free access to my special reports, because that's included, along with the window envelope numbers during the week? It's pretty simple. You just go to iraepstein.com, under the word, you'll see it on the top right, research. It's all there waiting for you, or move your cursor to the top here and give that a click. I'm Ira. You have a good day, and I'll see you all tomorrow. Take care.